Welcome to the Valmika Property Investing Podcast, where I, your host, share the key to success in the Australian property investing market. I'm the founder of Valmika Buyers Agency. You can find us at valmikaproperty.com. The contents of this podcast are the personal opinion of your host and are intended for entertainment purposes only. Any financial advice must be obtained from your trusted financial advisor or a qualified professional. In today's episode, titled How China's Economy Impacts the Australian Property Market, we're going to break it down into three segments. The first segment is the most recent past, so how COVID impacted China, and the resultant impact on China, how it's affected global supply chains, and in particular relating to Australia's property market. Second segment we will discuss is the recent developments, so Chinese government policies, current property market policies, and their global effects, and in particular, tying it back to Australia's property market. And then lastly, segment 3, the future prospects of China's economy and the possibilities it'll create for us in Australia, and in particular, the Australian property market. So let's dive straight into it. So past COVID had a huge impact on China and in every economy around the world. So the economies around the world significantly declined in economic activity. Now, China's was particularly important because China is the manufacturing powerhouse of the world. And because their manufacturing capabilities grounded to a halt, it created huge global supply chain shortages. So we saw it in all aspects of the economy. So the first one in particular was chips. So for computer chips, there was a huge shortage in computer chips. And as a result, companies like Apple struggled to launch their new product and have enough supply for the world. So there was huge supply shortage. There was people waiting in queues for their product and weren't able to get their product, and they had to wait a couple of months delayed, sometimes a couple of weeks delayed to get the actual product. And this flowed through to all aspects, including cars, the car industry. Car prices went up because there was a supply shortage of cars. And this all had to do with China's manufacturing capability grinding to a halt. Now, where it impacted Australia quite significantly was the property market, because China supplies the building materials to Australia, and there wasn't a good supply of building materials. As a result, the demand for them went up and the prices went up significantly. And this had huge impacts for developers and builders in Australia. So they had these fixed contracts where they were committed to building for a certain price. They weren't able to commit to it, and many of them went bankrupt. And what this did was many projects were put on hold or completely scrapped. So the supply of property into the Australian market decreased substantially. And a resultant crisis, so to speak, has happened where there's a supply shortage of property in Australia. And the impact of that, of course, is a shortage of supply, not enough to meet the demand, and property prices dropped, but not as significantly as they should have because of the supply shortage. And the ramifications of that now will be felt, especially in the next bull market, because there is a current shortage. So moving to today, what's happened with the Chinese economy since? So the rest of the world's come out of COVID, and we had this huge boom around the world. But this didn't happen in China. China is actually currently in a recession. But why is this the case? And it's got to do with an economic policy tied to the Chinese property market. So China went on a massive spree of building homes, building places for people to live, because they had this huge migration of population away from rural areas into the cities because China's economy was growing quite aggressively and they needed places to stay. So companies took in huge amounts of debt in China to build all these properties. And there was a property bubble that was being created. And the Chinese government doesn't view property as a financial instrument like it is here in Australia. They view it as a place to live, and therefore it shouldn't be expensive. It shouldn't be used as a financial tool to create wealth, so to speak, like you would in like stocks, for example. So they try to put a halt to this. And the unfortunate reality is their policies were too aggressive, and it caused many of these property development companies in China to go bankrupt because they had too much debt, and they couldn't sell enough properties to actually pay back the debt, and as a result went bankrupt. And this had a huge impact on the Chinese economy because many people had placed deposits for their homes, and because these companies were going bankrupt, they couldn't finish the homes and they couldn't pay back their deposits because they had no money to pay back the deposits, and it caused a huge amount of consumer sentiment dropping off the cliff. So there was literally no consumer confidence in the economy. So on the back of that, consumers stopped spending in all categories across the economic sector, and it caused a huge slowdown in China, and that's currently what's happening. So what were the impacts of this current recession in China? How's that impacting Australia and in particular the property market? Well, for one, it hasn't the Chinese manufacturing capabilities haven't been able to play catch up with the supply shortages to the extent that people were hoping. And the reason for this is because economic sentiment is down and consumer sentiment is down. Companies are not investing in China. And because of that, they're not investing in more capabilities to manufacture. So the supply shortage of building materials hasn't caught up, so to speak, with the backlog as much as people were expecting. So building materials are still pretty high. So that's one impact. And obviously the impact of that flows through to Australia, less people wanting to build because it's too expensive, etc. So it's not helping the supply shortage. Number two is Australia is the export engine, so to speak, of the world because we're very fortunate to have all these raw materials, so iron ore, coal, etc. And because of China being in a recession, there is less opportunity for Australian companies to export their raw materials. And as a result, Australia's economy isn't making as much money as it could. So there's an potential economic slowdown on the back of it. So that's one way it affects Australia's economy. Secondly, because the demand for our goods is waning, it means that there's less demand for Australian dollar because they need to purchase Australian dollars to purchase our product. So they're not purchasing Australian dollars, which means Australian dollar is weakening. And the impact of a weaker Australian dollar is we get inflationary pressures on the back of it. But why would we get inflationary pressures on the back of a weaker Australian dollar? It's got to do with price of oil. So oil is priced in US dollars. Most raw materials are priced in US dollars. And because our Australian dollar is weaker, it means the cost of energy is increasing. So in particular, fuel prices, diesel prices, etc. And that is inflationary. So the impact of Australia's recession is it can slow down our economy and cause inflationary pressures in our economy, which means higher interest rates for longer, and high interest rates is negative for property prices. Having said that, it's all in balance. So because there's a supply shortage in Australia and because there's this huge migration that's playing catch up in Australia, the demand for property is still high, which is why you're still seeing properties prices increasing currently on the back of that. So moving on to the last segment, and that's the future prospects for China's economy and the possibilities and opportunity it's going to create for Australia. And this is the exciting part. So because China is in this recession, the Chinese government is stimulating the economy. So you would have heard in the press that they've cut interest rates twice. Obviously, their interest rate regime is a little bit different to Australia's. They target different parts of the interest rate curve when they cut interest rates. And in particular, they are targeting the shorter end of the curve where they've been cutting interest rates. There's a lot of speculation of fiscal stimulus that's going to happen in China as well to stimulate their economy. And there are other benefits that they are doing, such as revising the definition for first home buyers. So in China, if you had any form of debt previously, you wouldn't be considered for a first home buyer. But now they're scrapping that definition. So it's broadening the concept of first home buyers, which have a tax benefit to it. So they're implementing those kind of policies. And what that'll do, obviously it's a lag effect, as most economic policies are. But because they're stimulating the economy, the theory around that is it will improve consumer sentiment. And when consumer sentiment improves, the economy starts to improve. With the economy starting to improve, companies start to reinvest and they will put more capital towards manufacturing and playing with that catch-up. So what that will imply in the future is Australia will be able to export its inflation, so cause a deflationary environment in our economy because we'll be able to get cheaper product or from building supplies, etc., from China because of this economic stimulus, and that will add fuel to the fire for the next property boom that will happen when interest rates eventually come down in our economy. And that's prospects for the next 12 to 18 months. So opportunity is now to get into the property market while prices have not gone back to where they were prior to the 2022 bear market. So there's still opportunity because when the next bull market comes, there will be a huge influx of demand for purchasing properties because investors and normal people wanting to buy a house will see lower interest rates on the horizon and more affordability. And with China's deflationary impact for building supplies, it should have a positive result for the increase in supply and rejuvenation of our building sector in Australia. So moving on to this week's auction clearance results. New South Wales, good clearance again for this week, a 73% clearance rate with Sydney at just below 75%. Victoria clearing at 69%, so slightly under the 70% level, with Melbourne also slightly under 70%. Western Australia looking particularly low, and I think at the time of the market statistics that I'm reading here through CoreLogic, there might not have been all the data that has come through because at the moment we're only seeing what's only being reported 12.5% clearance rate in Western Australia, with Perth 17%. It does seem low, but it would make sense that Western Australia would have a lower clearance rate because they are more affected by the mining slowdown on the back of the Chinese economy, like I just explained. So it would make sense that their clearance rates will be a bit lower than other major states in Australia. Queensland clearing at 63%, with Brisbane showing a strong almost 71% clearance, obviously gearing up for the property boom that the next Olympic Games, I think it is, that's coming, or or something like that. Forgive me if it's not the Olympic Games, but it's a sporting event to that extent. Then the obviously still the highest clearance rate in Australia is South Australia, with a strong 87% clearance rate, and Adelaide clearing at 88%. I hope this podcast was valuable and insightful, and we'll see you on the next one. Thank you for joining me on this episode of the Valmika Property Investing Podcast. I hope you found our discussion insightful and empowering. If you're interested in finding out more about our services at Valmika Buyers Agency, visit our website at valmikaproperty.com. There you'll discover how we can assist you in making informed decisions and achieving your property goals. See you on the next episode.